Okay, now we'll look at our next day. We'll call it day 2, and we'll look at the prior day's daily range. And the prior day's daily range was the day that we just covered, and this is the next day. But before we start on talking about day 2 down here in the daily range, I want to just point something out. And now the close, this red line was based on the close here on this Friday. But now as we follow this red line down throughout the course of the week, can we see how once we closed down below, we had trouble for a few days getting above, and even when we did, staying above that close? See, and that's because that's the weekly close. The daily close is going to be stronger than the hourly close or 4-hour close, and the weekly close is going to be the strongest of all. So when you look at the daily range, you can also apply these concepts to the weekly range or even the monthly range, and you would just take the high, low, open, and close of the weekly bar and use that as your range, or you can do a combination. So now let's set up our daily range for day 2 by drawing our lines for the prior daily range. And okay, we have our yesterday's low, yesterday's high, yesterday's close, and yesterday's open. And this line should be for the close. Okay, so we have our high, we have our low, we have our open, we have our close, and we have our open. And this is our day here. This is our current day. Okay, now we've established our daily range for day 2. From the top of the range up here to the low of the range down here. Now when we're day trading or trading off the hourly or lower time frame, these are the locations where we want to make our decisions. These lines, this daily range, these are the decision points, because these are the traders left over from yesterday, and those who are in a negative position are waiting for price to come back up or down to them so that they can at least break even. And once you start looking back on your chart, you will see that 9 times out of 10 price adheres to support and resistance levels as presented by the daily range. Now if we look and see what happened according to the prior day's range for our day 2, we look and see that we opened right at the prior day's close, and we first moved up above the prior day's open here, and that would be a buy signal if we have our close above on strength according to our Archimedes principles. And once we get that close on strength, we would anticipate price to go up and bounce off of resistance here from the prior day's high. This is the prior day's high. And now that brings me to a very important point. Now you see how at the open we first moved up here, then we broke down. But now if we back up just for a minute and we look at the prior day, first we moved up at the open before we broke down. The prior day before that, first we broke up at the open, then we broke down. And this is proof of a very important tendency of the market. If you're going to be playing the market on the lower time frames, this is so important. and I call this the daily head fake. And that's because on most days the first move is false, or on most days the first move is a head fake, meaning that the first move, if price is moving up towards resistance, okay, you can anticipate that price is going to bounce back down, that we're going to have a down day. And just like here, we can anticipate price moving up to challenge prior resistance, and if it does that first at the open, then we anticipate a down day, and vice versa. And if we just go ahead of ourselves just for 1 second here, and we look at our next day here, which is going to be day 3 that we look at, we see that now here price breaks down at the open, and then you have the up day. And this is why I call it the daily head fake. Now, it doesn't happen 100% of the time, but I would say 7, 8 times out of 10, that's usually the way it works, and that's enough for us to be concerned about, and enough for us to take advantage of in our own trading. So now that being said, let's look and see what happened on day 2 that we're looking at. Okay, we opened where we closed. We moved up and closed above the open, but we closed above the open on a weak bar. We had lower volume here, and that's a break above resistance on lower volume. That says weakness. So already, even though we closed above our first resistance, which was yesterday's open, we did so on weakness. And if we already know that the first move is usually a head fake, then we can already start planning for a short position, either on a reversal here at next resistance, or on a breakdown below support. And what we get is a breakdown below support on a weak bar according to your Archimedes principles. It's a weak bar because we closed down below opening support, and we have operator participation. So even though we have a lower volume, we have operator participation, as we talked about in the Archimedes principle. And so this is a weak bar that says price is going to continue down. Weakness means down. And also here what we have is a bear pivot. According to your laws of charts and men signals, we have a bear pivot. And even though this bear pivot is on lower volume, if we incorporate our Archimedes principles here, we know that this is a valid bear pivot, and we know that we want to go short here. And even though our next support level below is very close, so if we were going to go short here and play this pivot, we wouldn't want to take profit here, and we would want to go down and maybe try and take profit down at the low here. And we didn't reach the low here, but we'll get into that later. We have some very interesting things to discuss as we go along here. And so we get the pivot, we get the close below support here, and now this is resistance. The open or the green bar here, that's now resistance. And we're looking to go down, and we did. Okay. Once we get down near the prior day's low, and just to show you something here, and the low really means the swing bar. You know, anywhere within the range really of that swing bar is testing the prior day's low, and anything up within the range of this swing bar here on the way up, that would be testing the range of the prior day's high. But anyway, so now once we get a close below here, okay, we may start looking for a pullback here, because as you know from your LCM rules, a range bar here, and once you have a range bar, you typically get a pullback. And we continue down and we test the range of yesterday's low, or yesterday's lowest swing bar, and we move back up to test the open and the close here, and we fall back down to test the bottom of the current day's range. But now on the way up, we, just to reiterate, we see what stopped the move: yesterday's close, yesterday's open. And even here, when we come back up and we do close above yesterday's close here, we do so on a weak bar. We have a lower volume on this bar, and our MFI indicates there's really very little interest in the market at the moment. So once again, just pointing that out, just to affirm once again that the daily range does act as support and resistance.